everybody. Happy Thursday. Happy Thursday, guys. And it's an amazing Thursday. Welcome back to the channel. And if you're new to the channel, thank you for clicking. So a little recap on this whole channel situation and myself. I created it for completely selfish reasons, right? So last year in July, I had I had not been able to be consistent in my trading, and I really did believe that I had what it takes, right, to do so. And one of my downfalls has always been either over trading or just not sticking to my rules. So I created the channel so you guys can help me hold myself accountable within my trades. The issue is, as we grow as traders, we start tweaking a little bit. We start using our own discretion, and that's been kind of hard for me to get away from. But overall, the strategy that I used last year is still working this year. It's not as high of a win rate, but it's still high enough to help you pass an account, and it's still high enough to make you money. So going over the strategy in itself is extremely simple. We're trading NQ. We're trading on the 5-minute chart. And all we're going to do is from midnight open Eastern Standard Time, right, to 8:30 in the morning, we're going to grab price, the high and the low. So basically what you're doing is you're going to let price do whatever it does between that time, right? You don't care what it does, right? At that point in time, you're going to mark out the high, and you're going to mark out the low. I'll use this one. We're going to mark out the high, and we're going to mark out the low. And all you're going to do is wait for the high or the low to be broken. That's it. It's super simple. So let's say in this case, the low is broken. You're waiting for a market structure shift. A market structure shift is when a lower low gets taken out, and then the higher low is also has a candle closure above, right? So the market is reversing. At this point in time, you start taking your fib out and you follow the new higher high. The moment it starts pulling back, you're going to enter in on the 61.8. Stops are going to be below the low, and you're going to target 2 times risk. That's it. That is the entire strategy within a gist. Now, I do take some discretion when I trade this strategy. Sometimes I don't stick to my rules 100%. The only reason is because of screen time, right? Seeing things play out over and over again. So I want to go over today's price action and walk you through the 2 trades that I took, right? I told you that I was going to pin 2 strategies against each other. One was going to be that scenario in itself, and then also I was going to drop down to the 1-minute chart, right? And then look for a actual market structure shift and enter in on the market structure shift. So getting into today's price action and looking at the overall chart, we were extremely bearish, right? We had obviously this giant push from FOMC, and then it came right back down. So I was honestly bearish at the beginning of the day on the market, right? So when the market opened up, I was bearish. Taking a look at price, marking out the high, marking out the low. We did have news at 8:30, nothing crazy, but playing price forward. Here's your news candle, right? So news candle created a data wick, right? News induced volume to the downside, and then it closed up and it created a high off of the news. This news high did not take out the previous high. So this previous high is still valid. Playing price forward, we finally do take out this high. The issue with this whole scenario is that this wick that was created by news, right? Is engineered. It's not because of just regular liquidity or price action or volume within the price, right? It was created by news. Playing price forward, in this scenario, we needed this technically to get broken. It didn't. I did not go in on this trade, and I'm just being completely transparent. When this started to pull back, I wanted to, but we were getting close to 9:30. And since I wasn't sure on what was going to happen at 9:30, I decided to stay out of the trade. However, if you mark up the strategy and we take a short position at the 61.8, covering the highs and targeting 2 times risk, if you wanted to and you had the balls, if we were further away, right? If we actually closed below this low, I would have taken the shot at it. But I didn't. Playing price forward, we tap in and full TP within the first 5 minutes of market open. Right? So, and then I was hoping maybe we do get a second shot at a re-entry, but we didn't because we took out the lows. Right? So now at this point we're flipping to buys and we want to see a buy setup. Again, it's the same exact scenario. We're looking for a lower low and a higher low to form, and there to be a shift. So here's your lower low, and here's your higher low being formed. As you can see, we took out the previous daily low. So playing price forward, you're going to notice that we almost take out this high, right? So, oh shoot, I apologize. This would be the high that we're looking to have the market structure shift right here. So let's, you know what? Let me just take a few steps back, replay price action, so you understand. So as price continued to dump, right? We have the previous daily low, which is right here, right? And since we broke through everything, midnight open, the what's it called, the London lows, I had a extremely good guess that we were gonna hit yesterday previous day lows. So that's where I wanted to start looking for my setup, was at this point. Playing price forward, we took out this lower low and created this higher low. At this point in time, if we get a market structure shift, it would need to either take out this higher low or create a new higher low while taking out a new lower low. Playing price forward, that doesn't happen. We go straight for the previous daily low, and then this would be for our market structure shift, right? We would have to take out this high. Now, when I said I used my own transgression, as far as, is that even a word? Huh. Discretion. There you go. When I use my own discretion on this trade, is because this is not the actual chart that I look at when I'm trading. This is the chart that I use when I show you guys my trade breakdowns as far as the strategy goes. But while trading the strategy and learning a little more, I have tweaked it a little bit. So I am not going to mark this up as a win, but I wanted to be completely transparent because I did take this trade and I took it on that 300K account, and I did hit take profit. Now, showing you the chart that I actually traded would be this, right? So right here you have the S&P and you have NASDAQ. At the same moment in time, even though we did not take out this higher low on the S&P, we did, right? On the S&P, we came up and we took it out. So at this point in time, I was looking at a few things. I was taking my fib out, measuring it, seeing where the 61.8 is, right here, right? And I set my pending order, long position, right? Targeting 2 times risk. I was willing to take the risk even though it didn't meet my criteria on the NQ chart, because it did show the pattern on ES. They directly correlate one to the other, right? So marking it out on ES, and I know I could have taken the trade on ES, but for some odd reason, I rather trade NQ. It's just how I am. I am a lot more comfortable, and I just enjoy for whatever mind-boggling reason, trading NQ opposed to trading ES. But I want to show you guys a few things. Long position, right? 2 times risk. Now, here you have ES tapping in to the 61.8. Playing price forward on NQ, we never get it. At this point in time, on this actual candle, it's the same thing as this black candle that's here, right? As you can see, the cursor is above the same one. We had already tapped into the 61.8, right? As this was pushing down, I saw us tapping into the 61.8. So I hit a market execution on this trade. And all I did was I moved my my stop loss to entry, and I targeted 2 times the risk. Well, whatever. I took on a little more risk because typically I was looking for 1%, right, to make 2%. So I was risking $1,000 to make $2,000. I took on I think it was $1,300 worth of risk, and then I closed out at $2,000 worth of profit. So playing price forward, you're going to see that price eventually goes my way, and I hit full TP. So that was the setup that I took for today. I know it doesn't stick to the rules 100%. I'm not going to add this to my Excel sheet because it doesn't stick to my rules 100%, but I was extremely happy with the trade. Now, the scenario that I spoke about the other day in my video, as far as just going in on a market structure shift on the minute, right? So here we have I was iffy on this. I didn't go in on it because I was still targeting that previous daily low. So the moment that we tapped into the previous daily low, I executed the trade on the what's it called, on the market structure shift. So on the minute chart, you're going to see that we created a market structure shift. Well, actually right here, right on this candle. On this candle closure, we took out this high. So same thing. I took a long position on the other account. I covered the lows. The stop loss was way bigger than the pullback that I got in on my trade. And I let that shit ride. 2 times risk. Where's 2 times risk? Somewhere up here. And we just played it right out. Right? Let me just jump to the 5-minute chart. Play price forward. And there you go. Full TP. It took forever, but it hit full TP. So currently, I'm up $4,000 on one of the 300 accounts, and then I'm up $2,000 on the other one, right? I know a few of you guys have asked me as far as contract size and everything else, and I promise you that I'm going to do a video getting into that, right? But something that can help you while you're, because I know this is different than CFD firms. MQ. MNQ. This is the micro. So for you guys that are new to futures, you have the mini, and then you have like NASDAQ regular, and then NASDAQ micro. So for every 1 contract on regular, it's like 10 contracts on micro. So a way that you can figure out how much you want to risk on your trade is as follows. Let's just say that you were going to get in on this position, right? The one for today. Let's say that you're waiting for the pullback and you want to take a long position. And this is your trade setup. You're waiting for that pullback and you're targeting 2 times risk. Somewhere around here. There you go. All you have to do is right click, right, on your whatever tool this is called, right? Like the trade tool, and you're going to create a limit order, right? At that point in time, right here under USD risk, you're going to put, I want to risk $1,000. and it's going to tell you how many contracts will more or less equal that $1,000. When you click on the actual contracts, it'll tell you how much you're risking, and it says 954, and you're like, shit, but I want an even 1,000 because it just helps with my head. Well, you're not going to get an even 1,000. What you can do is maybe risk 10 contracts and risk a little more. It's 1060. And if you want to see numbers on your charts, you hit buy, right? It puts your limit in, here's your risk, and here's your take profit. You should make around 2,125 before commissions. That's it. So when you go back to your Ninja Trader or Trade-of-8 or Rhythmic or whatever platform you're using to trade futures on, right? That's the amount of contracts you would use on a micro account. If you're trading regular NASDAQ, you would use just one contract. Now, the reason why I like using micros is because of the fact, yes. For example, in this scenario, if I wanted on a 150K account, I wanted to risk $500, I wouldn't be able to because you can't risk less than one contract on NQ. You would have to go to minis and then risk 5 contracts on the mini. It would give you the risk to reward of $500. To get this on your chart, you go to paper trading, right? And then it'll have an option to set up a paper trading account on TradingView. So that's what you would do. It's super simple. I'm going to do a video if you guys want to as far as comparing Apex to Top Step. They both have their pros and cons. And to be completely honest, I'm a little biased towards Apex right now. And below, you're going to see a link for saving 80% off. And also, you're going to have a link to Apex. Now, the reason why I'm biased is the fact that I passed my Top Step combines, right? So I am completely funded, fully funded with Top Step right now. And they lower your contract size. Where I was used to trading a max of 15 contracts on a 150K account, they lowered it to 3. Now, there's nothing wrong with that because as far as my strategy goes, it's very rare that I'll use 3 contracts on NQ. However, they only give you 3 contracts on micro, which is bullshit, right? They should at least give you 30 contracts because 10 micro contracts equals 1 regular contract, and it's not fair. So when I'm taking a trade, the most I can risk, for example, if I'm risking one contract on NQ and it's $1,000 on a micro, the most I can risk is 3 contracts and it's $300. It doesn't give me the power to actually adjust my risk to reward. So right now, unfortunately, I'm not making as much as it should be because I'm just risking 1 or 2 micros, trying to get those base hits in so I can actually pass the 5 days of making $200, which I'm almost there. And yeah, but I'm going to do another video getting into all those different pros and cons on the account. And if you guys have any suggestions, let me know, and I'll see you guys tomorrow.